So let's get some reactions from people in the know on how, I guess, how feasible and exciting this looks. I'd like to welcome Seán Kelly, who joins us from the European Parliament. He's an Irish MEP and a member of the EPP, so the European Parliament's biggest political group. He's been voted MEP of the Year twice, no less, but he joins us today primarily because he's the Shadow Rapporteur on the current revision of the European Energy Performance of Buildings Directive. Trilogues on that starting, with the European Council having adopted a position in late October. And as we heard, the main committee that Seán sits on, the Industry, Energy and Research Committee, has actually already discussed the concept of an EU renovation loan. So looking forward to hearing from you, Seán, I guess a look ahead to the EPBD trilogues, and also how this particular tool is likely, or hopefully is going to be picked up in the new legislation.
Thank you very much, Sonia, and good to be with you today. This is a very important webinar, and congratulations to Climate Strategy for organising it. Without a doubt, the renovation of the EU's building stock is a key Green Deal priority, but since this designation, the landscape in Europe has changed. This is a problem at the minute. The pandemic has left significant scars across Europe, not just in social and health terms, but also upon the economy, supply chains and trade routes. We suffered under the cloud for 2 years, and as governments borrowed to keep the economy afloat, we must be aware how this has affected individual purchasing power and the strength of national purses. Even with the consequential impact of the pandemic, the world's gaze has shifted to a new crisis in the East. Putin has waged a callous war against a peaceful neighbour, willfully ignoring the unnecessary and tragic loss of life. Yet his actions have fundamentally changed the trajectory of the energy transition and caused a crisis in security of our energy supply. However, what we must try and emphasise is, in reacting to the crisis, we must not trade one dependency for another, nor should the immediate actions of the energy crisis be to the detriment of the future needs of our energy system. Europe has changed, the world has changed, and we must be prepared to change with it. Bold action must be taken to protect citizens from the worsening energy price hikes that has to be done, especially this winter and next winter in particular. The market should be for the benefit of society and not siphon the life out of it. To reduce dependency on fossil fuels, particularly gas, it is clear that further action is needed to reduce buildings' energy consumption. A massive scale up in renewable energy and power generation, industry, buildings and transport will accelerate our phasing out of Russian fossil fuels. It will also, over time, lower electricity prices and reduce fossil fuel imports. This is an inflection point for EU energy policy. Reducing residential energy consumption will greatly reduce the need to increase the EU's generation capacity, especially for peak hours. Less pressure at peak times allows better grid balancing and extenuates the effectiveness of demand-side flexibility measures. The residential sector alone accounts for 40% of EU gas demand, mainly for heating and cooling. Reducing residential energy consumption would greatly reduce the need to increase the EU's energy generation capacity, especially for peak hours. However, at present, there is a funding gap of 214 billion a year for green financing for residential buildings, which will require a greater input from bank loans. I agree that bank lending is an appropriate channel to respond to the financing of renovations. They are elastic and decentralised via the extensive network of commercial retail banks, which Peter spoke about a few moments ago. Banks already play a key role in funding house purchase transactions. It is therefore natural that banks should also further facilitate the financing of renovating those same houses. However, households and businesses lack incentives to take up loans for renovation purposes and face liquidity constraints. As for the state of play in the EPBD discussions which you asked for, the first thing I can say is that we are still in the middle of intense negotiations at political and technical level. The Council has reached a general approach described as a fragile compromise. However, in my view, this approach is not strong enough, and at this point it is clear that big gaps exist between the two co-legislators, even though, of course, Parliament's position isn't finalised yet and is indeed complicated at this point in time. Internally, within the Parliament, as I said, there's a significant division. This is best illustrated by the fact that the Transport Committee voted against its own opinion on Article 12 of the EPBD on sustainable mobility, where it is joint competences. The EPBD itself has become highly political, not welcome, but true. Yet finding a balance between the need to revamp the built environment and not impose undue financial burden on households and businesses will be extremely difficult. It may be difficult, but at the same time, in my view, it is necessary. This is not just a carrot and a stick matter, but also a capacity matter. However, the EPBD under Article 15 extends the toolbox for member states in relation to financial incentives and market barriers, including energy efficiency loans and mortgages for building renovations, and by introducing the notion of a mortgage portfolio standard. Thus far, we have had only preliminary discussions on Article 15. However, I've been encouraged by the exchange of views we've had so far, and I believe that EP will support strong provisions in this article, and certainly I'm working towards that. I would say we should ensure it does not become too bloated and sends a strong signal to the financial sector with provisions to support staged deep as well as deep renovations. There needs to be much stronger links between the financial and the renovation sectors. The EPBD can play a big part in this. Firstly, by ensuring banks have the appropriate access to data so that they can access or assess their risks. Secondly, there must be serious consideration given to making mortgage portfolio standards for banks mandatory. In my view, the Commission should be empowered to specify the regulatory pathway for mortgage portfolio standards to provide further clarity around the functioning of this innovative mechanism and ensure a level playing field. However, an EU-wide renovation guarantee fund would enable credit institutions to reduce their risk exposure on green mortgages portfolios and would mitigate additional requirements for banks. I have tabled amendments to the EPBD to specify this and have engaged with officials in the Commission to further investigate this possibility. Unfortunately, at this point, it is too early for me to share progress as we're still working on the initiative and it has only briefly been discussed in negotiations. There are several innovative financial mechanisms and loans that could be deployed to incentivize borrowing. Experts will go into detail on these. Already Peter and Claude, Robert have mentioned some of them, but the provision of affordable long-term funding must be at the core. This is going to be a key point for us, and I look forward to further discussions, and hopefully we will get it finalised and voted on in the ITRA committee this month with a view to finalising it probably in January of the new year. So with that, I thank you very much for your allowing me to speak. And then, of course, as I say, once we have the meeting at the full Parliament, if they vote in favour of our report, which I hope they will, then the trilogues would start in January. So that will be when we will be really getting down to detail. And as I mentioned initially, we would regard the proposals coming from the Council as somewhat weak. There are those within the European Parliament who want to have our report maybe even weaker. So it's delicate at the moment. We have to see what we can do, and obviously we must build a majority Otherwise, then we'll have nothing. But I'm still confident because all the evidence is there, as has been pointed out, that if we do not have a good EPBD, then we are not going to meet our targets for 2030, not in mind 2050. Thank you very much, Sonia.
Thank you very much for that, Sean, for giving us an update on where things stand in the Parliament, and indeed the complications of getting a position agreed there, never mind with the Council once the trilogues start. And I think thank you also for bringing in the wider context. Indeed, we've moved from one crisis to another. And that has meant, I suppose, that the urgency, certainly, of doing something on energy efficiency in buildings is greater than ever. And as you've pointed out, there are a number of things. So there's a lot that the EPBD could do to help with that, from introducing mortgage portfolio standards to creating this facilitating framework that Peter talked about for an EU renovation loan, and on a very practical level, things like ensuring appropriate access to data. Thank you very much for that.